First, I just want to start off with your thoughts about the impact of tariffs and just how you're viewing auto stocks. I know you're not an auto expert, but when you look at investing in auto stocks, what's your view right now?
So ultimately, we have underweight to auto stocks because they're a consumer discretionary, and we saw a slowdown in the economy. So we expected automobiles to be impacted. Now with the tariffs, that's increasing exposure to European car companies such as Toyota. We do hold Toyota, and we're looking very closely at that. But we're seeing that the tariffs can have a negative impact on the automobile consumer discretionary sector.
All right, what about the overall markets? What's your word of the day? How do you see today shaping up, or just how do you see the current environment?
Yeah, so the word of the day is opportunity. Given the increased volatility, we see opportunity in defensive sectors such as healthcare.
All right, so you're liking healthcare right now. Are there any other parts of the market you're liking? I mean, we saw things like consumer staples kind of catch a bid yesterday. People were putting money in there. Are there other defensive areas of the market, or maybe even areas that aren't defensive, but you still see having a lot of upside in this current environment, which, as you mentioned, has a lot of volatility?
Yeah, so some other sectors that we like is consumer staples, as you mentioned, utilities. We're looking for those companies that will not be negatively impacted by the downturn or the slowdown in the economy. So those are the sectors we like. And then this is also a stock picking environment, so you can find opportunities in other sectors also.
All right, so you're seeing opportunities in other sectors as well. I want to know, as we look at this economic slowdown, some people worried about a recession. In fact, Ernst & Young coming out saying they see a 40% chance of a recession coming up in the next 12 months. As you look at these other sectors, do you think they're going to be impacted, the markets, individual sectors, by the second read of GDP coming up later today? We've been talking a lot about the economy and GDP, and I know you're somebody who looks at the GDP now number that's put out by the Atlanta Fed quite closely.
Yeah, so that GDP now, back in February, it was at 3.9% growth. Since February, it has dropped significantly down to a negative 1.8 growth. So negative growth for the GDP going forward. And so what this means that we are definitely in a slowdown in the economy. Also, the possibility of a recession has increased significantly. You know, we're right about 40% probability of a recession.
So with that thought of a 40% probability of recession, you're agreeing with EY. What's your pick for today? You're saying you're seeing opportunity, so exactly where?
Yeah, so we see opportunity in Catalyst Pharmaceutical. It is a mid-cap biotech firm that has a very unique business model. That business model is that it acquires late-stage orphan drugs. It's referred to as orphan drugs because these drugs treat rare diseases but have a small use case. And because of the small use case, most pharmaceutical companies cannot be profitable. So, and hence they abandon these types of drugs, hence the name orphan. And so the Orphan Drug Act of 1983 actually provides cash incentives for pharmaceutical companies to invest in the orphan drugs.